So for those that are wondering or looking for signs that inflation in the U.S. economy is easing or lessening, it doesn't sound like you're seeing that. Is that right? What are you seeing?
Sarah, we certainly don't see inflation slowing down in our business. We take a look at our food basket, as you mentioned, we see an 8 to 10% increase in the food basket 2022 relative to 2021. And we also see continued wage inflation across the marketplace as well as we look forward this year.
So how are you dealing with that, especially for a Domino's, which is so known for the promos and the deals that make it so appealing for people to get delivery and take out? What you add to the $7.99, for instance, takeout package, I know, with the wings. How do you adjust for something like inflation with those rising costs?
Yeah, well, as a starting point, Sarah, we come into this with very strong unit level economics across our business, built on the fantastic work that our franchisees and operators do each and every day. So while these cost increases are certainly tough to absorb, we come from a great starting point with terrific economics. And then as we think about how we manage through it, there's a couple of different levers that we have to pull. Certainly pricing, on the top line. And we are taking some pricing actions, this year relative to our national offers, and our franchisees at the local level have tools to adjust their menu prices and their delivery fees. And then as we think about going from there to the bottom line, we've got a lot of initiatives underway around improving the operational efficiencies in our stores as well through the use of technology and just changing the way we do things to deliver more product with fewer hours of labor.
Well, Rich, to what extent is labor costs a big factor in that inflation you're feeling, both for you and for your franchisees?
It is a big factor, Wilfred. We certainly throughout 2020 and 2021, we saw wage costs increase. Some of that driven by minimum wage increases, but frankly, more recently, much more just by the supply and demand for labor in the marketplace. So in our supply chain business that we operate and in our corporate stores that we operate, we've taken a good bit of wage increases over time, and we'll see more of that here in 2022. And ultimately, we want to create great, well-paying jobs for our team members inside Domino's, and we've got terrific economics in the business that allow us to do that while still serving our consumers with great value.
But you have seen some slowing momentum from the consumer, right, Richard? I know last quarter, I think, was the first U.S. comp decline in years for Domino's. Is that picking up? What do you see out there?
So, third quarter, we did have a negative comp for the first time in about 10 years in U.S. business, but that was rolling over a 17+ % comp from the year before. So when you look at it on a 2-year basis, still really strong at about 15% on a 2-year basis. We still see a strong consumer out there. When you take a look at consumer spending, we look at savings, that consumers have stockpiled over the course of the last couple of years. We still see a robust consumer environment, Sarah.
Oh, Rich, I was looking at some of the slides that you were using in your presentation earlier today, and interested to hear what you think about the scope there is for you to expand more internationally.
We think we've got terrific runway for international growth. That has been the fastest growing part of our business, for some time now as it relates to store growth. And, as we shared with investors today, just looking at our top, 15 or so markets outside the U.S., we see runway for an incremental 10,000 plus stores. The QSR pizza segment is still relatively underdeveloped internationally. The segments are it's about the same in the U.S. as international, about $40 billion of pizza sold in the U.S., $40 billion outside, yet 95% of the world's population lives outside the U.S. So we see huge runway for long-term growth in that part of our business.